known Bhuvan since I've known Bhuvan since my college days. He was my junior in my college, but we did so many things together. We first started an event management company together, and we did a lot of things together. So, but things have come a long way. He he started his own company a few years back, which basically deals in wealth management. uh, I used to think that I can manage my own wealth and I'm very smart, and I did. I mean, I did fairly good for a number of years. I was maintaining my own portfolio and earning, like, anywhere from 10 to 15%, and I was happy with that. But it takes a lot of time, and I time which I don't have. I don't know. I don't have time to study the companies. I don't have time to discover the companies. I don't have time to decide when to buy, when to sell, those kind of decisions, right? So, and then I knew Bhuvan was doing this on the side, but when you, just like the song, right? When you think you're making profit, you know everything, and you don't need anybody anybody's help. But then I started talking to him slowly that this is what is happening, this is what I'm missing. And then he started introducing me to some concepts and some reading materials or something. Then ultimately I decided that it's easy to get somebody else manage the wealth, because that's not my job. My job is to earn money and take care of my family. If I do this all the time, like work 9 to 5 and then go on website and read company reports, I don't have any time left. So it takes attention out of me, and that's where Bhuvan came in. um, I like going to him was natural for me because I know him since, like, I don't know, so many years. But I did follow what he was doing and his portfolio, and what returns he's offering to his current uh, customers. So, which is why I decided to go with him, and I've been with him for almost a year now. So there's no looking back. I'm very happy. So I know him as a friend, right? But in last 1 year, I got to know him as a businessman, and his ethics and his commitment to his words. So if you like, coming from a friend and now a customer, I am very happy. So here's to you, Bhuvan Gupta.
Thank you, Nikhil, for your kind words. But let me tell you guys, he's not completed a year. I'll be very, very honest to you. And to make him my investor, I have to take him all the way to Berkshire Hathaway's private office to meet Warren Buffett. And believe me, here to all of you, I'm telling you that you can do this. The problem is, as he rightly said, is a time. So it's not that Nikhil cannot do it, or I cannot do it, or you cannot do it. We all can do it. The issue is the time and the confidence. So the reason why people might need people like us is to force you, push you to invest and remain invested, because that is the key. So what happened? Asian investor, 48% of his money is into the property, and if he makes 15% or 10%, 20%, he sells a stock. And then, you know how, I'm sure you all are now, so I'm talking to a lot of my friends in the US, and they all are buying properties. And now, since the property they are buying, they have to pull out the money from the stock market and invest into the property. So I'm not against the property, but obviously US has the highest, one of the highest taxation, which I confirm with my friends in Canada and US. And you need to have a larger sum in the end, let's say when you retire, to make sure that you have a healthy retirement or a very happy retirement, because everything is now costing roughly double in the last 3 years. So inflation is going to eat away. So a brief about us. We thanks Nikhil, thanks a lot for introducing us. $30 million is what we manage. Our track record is more than 20% continuously for last 3 years. To be specific, on 19 we delivered 22%, in 20 we delivered 36%, and 21 we delivered 22%. I am gonna talk about my product called Founders Portfolio. My mentor Siddharth Razdan, who is based in Canada right now, he is instrumental. He would like me to go global. We already have few clients in US. We can only onboard 13 more clients as per the present license. We have roughly 35 clients in the investment field, and total asset I already told you. And we have clients across the board from India to Middle East. I'm also in an advisory capacity. Also, we have a book of 200 crores, which is mainly in India with my friends who are the fund manager from India, like ASK, Motilal Oswal, Invesco, etc., etc. Now, this session is gonna be very, very interactive, and I'm gonna make it look things. I'm gonna make things very simple for you so that you understand. Now, simplest things are very difficult. For example, maybe weight loss is very simple, but it is the most difficult thing, and there's a $1 trillion industry which is being flourished because we want to have a healthy life or we want to lose our weight. Now, I'll just start with what our company presentation, etc. So, Client First Capital, as I talked about, we are in Mauritius. We have a placeholder company in Dubai. We have a wealth management outfit in India, managed by my brother and sister-in-law. We are a debt-free company. I myself is an investor, a private equity investor. The day I came to know that my fixed deposits are not paying me enough money, and even the properties that matter, so I have liquidated my FDs, and slowly and gradually I'm also liquidating my properties. It doesn't mean that you should liquidate that, but I'm just telling the whole psychology is all about being an investor, seeing it from the investor eye. So right now, today I'm interacting with you as an investor first, then an investment manager. So I'm going to talk about my journey in this presentation. We'll talk about our motto, why we are different from other people, what's our investment philosophy, the investment strategy, research methodology and selection criteria, strategy performance, which I just told you, portfolio composition, and appendix. And after roughly 15-20 minutes, I'll wrap it up in 15-20 minutes. And in the last part, we will run a very interactive session where I will make you as a fund manager. So you need to interact. Today, I request to all of you, be ready. We're going to ask you simple question and going to open your eyes. I'm thankful my ex-boss is also on the call. So Soman, thanks a lot for being here. A lot of you are my friends from LinkedIn and my first connection, and that's what we had to start with. So we said let's start with it. If let's say you can't afford us for XYZ reason, feel free to be in touch with us. Whatever you need, if we can help you out, the books you want to read, we have a very beautiful website. We have books recommended. Every year we go to US to attend Berkshire Hathaway conference. You are most welcome. Ask me how you can be there. My goal is to have 50 people or 50 friends or investors there in the Berkshire Hathaway conference next year on 8th May. So that's the whole idea. Now coming to the journey, it's a bootstrap. We bootstrapped the company in 2015. Before that, I completed my MBA from SP Jain College of Dubai and Singapore. I got a placement in Rack Bank. Throughout, I've been a campus guy, and I learned sales in bank, and I basically saw a lot of money. I saw roughly to $1.5 billion in terms of current account, saving account I saw, and my life literally got changed. I saw so much of money. But one thing I've realized is that money has a very little connection on those days with the studies. So all these BCom people, our backbencher friends, they are the filthiest rich. I'm sure Nikhil will agree to me that when we go back to Indore, where his hometown is, his friends have multiplied wealth more than what we have done in our studies. So a normal family, educated family, the father and mother says, "Beta, please padho, study hard, and then job karo. Nobody actually tells you like a Marwadi that please go and make money. And that's what we have to tune our mind, that if we want to make money. Making money is not bad. Getting attached to that could be bad. So we are not talking about here that you compromise your lifestyle or you compromise your life and money should be everything for you. We are talking about here to be pound wise and not penny wise. So that's very important. So many of us are very intelligent, but we are pound foolish and penny wise. So coming to the history of the company, I had one life. I had taken three promotion and I wanted to start my business and wanted to make sure I serve the client. And that's why we kept the company name as Client First, because nobody is there to work from the client angle. And that is why our fees are performance driven. So we're not cheap. We may sound a little costlier to some of you, but the good thing is it is 95% it is linked to your performance. So it's a capitalistic world. I cannot work for free. If I work for free and you make money, I will leave you. If you don't make money, I make money, you will leave me. If we both don't make money, we leave each other. The only way to sustain the relationship is that we both make money together. Now, am I the pioneer? No. There's a guy called Monish Pobrai in the US who's managing $700 million. He does it. Chris Mayer, my good friend from Washington, he does it. He's managing $85 million. Srinivas from SVN Capital, he does it. He is managing $7 million. Warren Buffett in 1957 to 1969, he has done it. And I am just very mini Warren Buffett trying to practice that philosophy against the tide in the common wealth management parlance. India, it is very common. So a lot of these PMS people are there in India. The only challenge there is they become so large, they don't know you and they have a typical way of approaching, but they could also be a very good avenue for you to make money. So we were with the private bank to start with. After we started the business, we were doing all kind of complex product like structure notes. Maybe you would have not heard about it, or accumulator, decumulator, and the bonds and the leverage. And then we realized that no, this is not the good thing for the client and for us both. Typically in the Middle East, client wants to make 7% and they want a capital guarantee. But the problem is that capital guarantee for 7% is not available. So our banking friends have invented something called the financial hazard product, like you would have heard about CDS and CLOs in those days. CDO and CLOs on those days in 2008 when the GFC crisis came in. Similarly, the bankers, the financial license, such a license to kill, a lot of complex products have been invented. And we left everything. We closed down the private bank account from Julius Baer. I myself had a private bank account. We closed down that as well. We launched our founders portfolio, and we we became an institutional client of Interactive Brokers. So we custody all the clients in Interactive Brokers, and we manage the money for all the clients through Interactive Brokers. However, we are a broker independent company because eventually we are your working partner. So we are trying to promote investing like a business. Now the discretionary portfolio has started. Returns I've already told you. So let's move to the next slide. Now, what's our vision? Our vision is to become a global startup. So any one of you would like to join me and start a US company, you're more than welcome. The philosophy is pretty much same. And I can tell you one thing, if we meet 10 people, 6 people want to deal with us because we keep it that simple. And I'm going to show you in the fag end of the presentation. We would like to reduce wealth inequality. Now you see there are a lot of people who want to manage HNI. We want to create HNI. So our mission is to create HNI. We want to reduce the wealth inequality in the society. And this session you can take it as a financial education. I keep interviewing the authors, the big fund managers, and I'm sure you should be benefiting from it. This is also an education session. 2-3 customers out of this session, I'm very happy. If not, no problem. The idea is that let's not take the foolish decision. So last time when I came in the US, I found that even in the US, people are taking the same kind of decisions. They're buying Shopify at a very high multiple, and then people just buying in the tip. So I want to tell you one thing. The only tip I want to give you, please don't take the tip. And the tip is only, so bull market you will be swimming, but when the bear market will come, you will be so naked that you will be ashamed of you and you will sell it. So please understand that don't take the tip. Only if you are, let's say you are investor on your own, only buy when you have done the research. Else go to the mutual funds or the exchange traded funds or people like us if you would like to have an edge on the investing. Our commitment is client comes first. And for that, even for employees' sake, we take them as a client. So I have a team of 11 people. I have 3 people in my research team. 2 of them are one is CFA 3 and CFA 2. They help me with the quantitative research and they talk to the management and help me to arrange the meeting. And I call the shots along with them. And we have a proper checklist. So Charlie Munger said that if you have checklists for everything, the chances is that you will go wrong is very, very remote. Example, there is no difference. So Mr. Yogi Berra said that there is no difference between theory and practical. But in practice, it is. Because the mind is very vicious. It does not let us practice theory. For example, let's say if I have to lose weight, if I'm diabetic and I don't want to eat ice cream, I know this in theory, but in practice, it doesn't happen. And there we go wrong. And that's why we need people who are incentivized for doing so. So coming to the investment philosophy, we are a value investor. Value investing and growth investing are same, but we are very clear that we want to buy anything at a lower price, because we want to have a sufficient margin of safety, and that is very important. It doesn't mean we buy low P. Yeah? The price to earning is a very flawed mechanism. We don't look at it. It does not tell the right picture, because it is the easiest data to get into, and that's where we go wrong. Our opinion, which has been derived from our experience, I'm sure people say higher the risk, higher the return. We call it lower the risk, higher the return. So please understand, the highest risk is fixed deposit. Highest risk is buying companies where you have no idea what you're doing. So risk comes from not knowing what you're doing. Next. Now, it's a very important thing which Warren Buffett wrote in one of his letters, which is about great, good, and gruesome company. Now, great companies always take the advance payment. So let's say Amazon, Google, Apple, Microsoft. You would have never heard about a credit that you bought an Amazon product and you're paying after 3, 4, 5 years or 3, 4, 5 months. So great companies have a great cash flow. You need to pay in advance, and then you get your goods, and they pay supplier after 1 month or 15 days or 2 months. So that's a great company. Good companies like banks, they give you good interest if you buy these companies stock, or let's say AT&T and all. But eventually, if you want to make more money, these companies have to raise more money. Like a bank who makes money from interest, if bank has to make more money, it has to raise more money, and then only it can earn more money for us. Gruesome companies like utility company, commodity company, which has now got no moat, mining companies, where when you invest, let's say $100 million as a shareholder, and the management is working on that money, at the fag end of the year, they say that we lost $10 million, but if we can raise more $100 million, we can actually convert this into profit of $20 million. So they convince the shareholder, and shareholder puts in more $100 million, and at the end of the next year, it turns out to be $20 million loss and not $10 million profit. These are government organizations like banks. So we stay away from the government organization, because they are not born to make money. If you remember, in the last government in India, this HPCL and all these oil companies, they were forced to subsidize the oil prices, and that's why they incur huge losses. So gruesome companies are absolutely no. Between great and good, great companies are very, very few. But the idea is, if we buy great companies with a very low debt, a high return on capital, a good quality of management, a good allocation of management on the business, and the companies which actually are internally cash flow generation is very high, the chances are that we're going to make great money. Now, our philosophy is SQGLP. Now, quality is very, very important for us, and then the size is very important, because the problem, if I buy Apple, Amazon, Google, Microsoft, the problem with me is that these companies are $2-3 trillion. Now, they're such a complex business that it is not easy for someone to understand. But let's say Apple has to make me 10 times return next 10 years. So Apple's market cap is roughly $2 trillion. To make me 10 times, Apple has to create $20 trillion worth of net worth, which is roughly not impossible, but it is not easy. So if I buy a company of $1 billion with the same quality of Apple, the chances is that this company can become $100 billion in the next 10 to 15 years. So I can make 100 times in that company. So we have to look at the size of the pond, size of the fish. That's why we insist on buying a company which are small, which is roughly between $1 to $30 billion, and there's a huge runway to grow. So generally we look for a company which is very much saturated in the home market, and replicating the model in the foreign market. That's a great place to be in, because the expenditure on the capital expenditure is very, very less, and they have to just replicate the model through the franchisee, and that's what the sweet spot is. Price, as I told you, margin of safety is very important. When people sell, we buy. So in May to July, we have forced a lot of investors that please put in your money. If you are not putting the money, at least understand that each and every company are buying their own share. So Apple bought their own share, Amazon bought their share, Amazon also bought iRobot. I'm sure you know that, the mopping company. Amazon bought One Pharma. Look at the Skechers, they themselves bought their own shares. So if you are a shareholder of an investing company, Open the financials and check if they are buying their own shares. Like Zoom bought their own share, $132 million. Look at today, people are saying Zoom is dead. Now pandemic is over, people want to meet physically, Zoom is gone, Zoom is gone. That's the time you will get a suppressed price. But you need to be very sure of what you are buying and why you are buying. So opportunity is there and danger is there as well. So when you will be buying the company at this kind of time, you will be very much alone. And you can do that if you practice from the great investors like Peter Lynch and Warren Buffett. Chances you will not go wrong is very, very low. Longevity. Now that's a very fair point I want to tell you. Now longevity is basically, I am not here to make 10-15% return for you or for me. I am here to make 100 times return for myself. So people who want to come to stock market, I want to tell you one thing: start thinking in times, stop thinking in percentage. Because first we have to behave like a billionaire to become a billionaire. That's a very important thing. Let's say, for example, I'm a very abusive drinker and I'm a very rash driver and I'm doing everything in my life and thinking one day I'll become a billionaire and I'll change myself. Not possible, sir. You need to start changing your life now. You need to sleep at 9 o'clock, wake up at 5:30, at least read 1 hour or 2 hours in a day so that you can be there. So my $1 billion is set. I have to survive for 30 years. I will make sure that my clients grow with me because it's a partnership. Now, quality, longevity, growth. Now, growth means the growth of the business. Now, management and business are like a horse and jockey. So we need a good horse and we need a good jockey. And if we have a combination of good horse and good jockey, 10 times will come from the horse, 10 times will come from the jockey. And that's how we will be able to deliver 10 times, 15 times, 20 times kind of return. And there is no leverage. There is no very, very hard, very small buying and selling. There is no trading. And there is full transparency with all the investors. That is the most important here. Because the only motto is to grow your wealth along with our wealth. Now, the same thing which I just told you, we buy a $1 to $30 billion company, companies which have existence for minimum 10 years. Research says that 96% companies fail in the first 10 years of their operation. I repeat, research says 96% companies fail in the first 10 years of operation. So it is an exclusion mechanism that you keep rejecting companies which are not fitting the framework or the funnel. You will be left with few companies and the chances that you go wrong will be very, very low. And then you keep reading about the companies, keep learning about these companies through different forums, through their financial report, through the management meeting, and you will figure out that you are sitting on great company. For example, when I buy Amazon in my portfolio, I think that I am Jeff Bezos' partner. And if I'm Jeff Bezos' partner, because I can't be as ambitious as him, I don't have a team of 100,000 people, I don't have that much of money, and I don't have access to the kind of things which these people are doing. But since I have become his partner, and if he's ambitious and he's going to grow by 20-25% year on year, he's going to take care of my share. That's a simple thinking one should have. So founder and business are very important. Nobody makes money for anyone. Founders make money for themselves, and since we are their partner, we're going to make money for ourselves. A very simple exercise. Economic moat, a very important word which has been coined. A company, for example, if you look at in any space, if you have 2 or 3 companies, the chances is that they will outlast. So like, for example, you in the US, in the second-hand car market where the car gets totaled off and the car is towed away by the insurance company and then sold as a salvage, there are only 2 players, IAAA and Copart. And with time, Copart is becoming bigger. It is outlasting their competitor called IAAA. And the reason is that they own the land. That is the advantage they have. So if you have the land owned, when the inflation comes, you can still match the prices because you don't have to pay higher rent. So it's a significant advantage with Copart. Same is with the dominant freight company in the US. These are some of the great companies, great decision makers, and that's economic mode. Now that's one economic mode. The second economic mode could be that, for example, Uber. In America, you have only Lyft and Uber. You have no other car company. You can have private taxis, but you don't have a listed company where you can invest. For example, in India, you have Zomato and Swiggy. You don't have more than two players. So just I'm talking about the economic moat, how strong the moat is. But you have many restaurants, but you have only one a door-to-door delivery. The restaurant app is Zomato, which is listed. Doesn't mean I am recommending you to buy Zomato or Uber. I'm just telling you the concept of moat. Quality, the quality of balance sheet, quality of financials, quality of and cash flow. They're very, very important for us. And the at least the good history of there, at least for 10 years. Scalability on internet. That is very important. So earlier, what was happening is that companies have the boundaries. Like for example, now scalability on internet is gonna. I'm sure in America when I visited Nikhil, nobody goes to really office. Everyone is sitting at home and they're ordering from Amazon, Google, Apple, and even we do that in Dubai nowadays. Noon.com. We keep ordering all the time. So internet is the key. Internet is a very low cost avenue for companies to grow their profits for all the shareholders. So scalability on internet is a very important criteria for us in case when we buy the company. Glassdoor ratings are also very helpful to understand how the CEO is, because at the end of the day, I am an outsider. We all are outsider to the investee companies. So management is the very important key for all of us to invest. Now let's move to the next slide. Now this is a track record. I think I've already told you. So we are today at, I think as of today we are sitting at 60-70% in the and the benchmark is at roughly 43-44%. This is asset allocation. It is, we don't believe in asset allocation. It happens. We believe in buying one or two company in particular domain and then we leave it. We don't. So for example, let's say if I have Amazon or Flipkart, I'll buy one company and I will not be buying the other company. If I have a car company, if a car manufacturer, I'll buy one car company in the world and then I will not go to the car company. So what I'm trying to say, that's how we look at the asset allocation. We don't really go fussy about it and etc. I'm also not fussy about these figures like standard deviation, max drawdown, recovery period. They're all technical things I don't really care about. All I care about is great companies. A concentrated portfolio of 10 to 15 companies is what people have made money through, and that's what I do. I think somebody is drawing on the screen. So anyways, so my mentor Siddharth Razdan, as I told you, and so he is 25 years plus experience in the finance and money management field. He's a private equity investor himself, and he has helped me a lot in terms of changing my thought process. And I will ask you all here today that please ask questions. It's all about your money. Whatever question you think can make you better, because in order to ask questions, you're also making me learn. So please ask questions. More we ask questions, we become better people. Mr. Raj Somani is our client, and he's also a British citizen. He takes care of the clients from the Britain, and he introduces a lot of Britain client. Mr. Anil Surin is a NLP professional. So these are the board members. My wife, she is also a partner in the company. She handles the whole back office. Mr. Gulshan, who is the first employee of the company, has become a partner in the company. So I think that's all about us in terms of the research team. Anirudh and Rohit are there, and the young bright chap, they're very good knowledge about the quantitative research. So I take their help to make sure that we follow our checklist pretty well, and then we meet these companies. I visit the companies in the US. So last year when I came to the US, I visited these companies to make sure that we do a ground research, and this is called scuttlebutt. The ground research is called scuttlebutt. So I believe in business analysis and not an access sheet analysis. That's very, very important. Now, how all this started and why I feel that all of you should learn this, and this is not very difficult. Now, I don't know how this got painted on the screen, but anyways, this is a good learning for me as well. So guys, now what I'm going to do is I'm going to basically run it interactive. We have roughly 20 minutes left, and I want you to participate. So do I have 4 to 5 volunteers who can participate? I'm going to show you how simple wealth creation is, because the problem is people really fear out of equity market, and they buy 1 or 2, 3 companies, or they buy 50, 60 companies. So I need volunteers here. If you can just come up and participate. I'm going to ask you 4 theoretical questions, and then we will do a practical where I'm going to give you the hypothetically my money, and you will be investing, and we will see, all of us will see the result. So can I have you talking? So Ameya, Amit, Cheryl, I think Smith is there. Can you guys please be volunteer?
Yeah, count me in. Hi,
Huh?
everyone.
Yeah. Thank you. Hi.
Hi,
Hi.
everyone.
Yeah. Hi. Yeah. Thank you for coming in. So now a very simple question I'm going to ask Cheryl and Smith and Nikhil to you. If your money is getting double in 3 years, and we don't need a calculator, we don't need a computer, we just need a simple plain mental mathematics. $1 million getting double in 3 years. What should be the CAGR? What will be the CAGR? So $1 million growing at what percentage will become 2 million in 3 years? I have no.
I think it's around 30%. I mean, I hope I'm right.
So 30% is not the right answer. Take a clue. Smith, what is your hmm? I think your voice is echoing. Can you type in? In all, everybody's guessing. Okay, no problem. Let me show you the eighth wonder of the world. Believe me, you think this is very, very stupid, very common thing, but this is very uncommon. And Ramdev Agrawal talking on CNBC with Nikunj, and Nikunj is also saying, okay, 30%. He made him to do it. And with my clients and my employees, whenever I meet and I ask them, and accept out of 10 people, 1 or 2% can answer it. It is such a simple maths, 8th class maths. So this is called power of compounding, 8th wonder of the world, and it is called rule of 72. If your money is growing by X% every year, it will take 72 divided by X years to get double. Is it okay? Simple now. Now tell me, if your money is growing by 1%, how many years it will take to double?
72.
Thank you. If your money is growing by 2%, how many years will it take double?
36.
3%?
Yeah, and divide by 3, whatever the figure is, approximately 20. Sorry, yeah, 24 something.
Yeah. Investing is like watching paint dry on the wall. It's very, very boring. Let's do the whole exercise. I'm trying to make it exciting. 4%, Cheryl. If my money is growing 4% every year, you become younger there in Canada, is it?
Yeah, the cold does that.
Okay. Guys, Cheryl is also a banker. Naveen is also a banker in the US, so you guys also meet each other. Cheryl has been in as a corporate banker in Abu Dhabi and Dubai and ADCB Bank. Yeah, Cheryl.
I heard you. You said 4%.
Yeah, so it will be how many years will get double?
Oh, sorry, I missed it actually. Somebody was talking to me, so I missed
If
what
the
we were
money
talking
is
about.
growing by X% every year,
Yeah. Mhm.
it will take 72 divided by X years to get double.
Yeah. Right.
Yeah, so if my money is growing by 1%, it will take 70 divided by 1 to double.
Got it.
If it is, so that way, if my money is growing by 4%, how many years it will take to get double?
4 divided by 2. Is that right?
12 years, I feel.
18,
Did I get it
18,
right?
Guys,
12
seven-
years. Yeah, absolutely.
No,
18.
70 divided by X. X is 4. So 70 divided by 4 has to be 18.
18,
Way
18.
around,
2
other way
divided
around,
by
other way around, column A into column B has to be 72.
18 years. Yeah.
Yeah.
Got
So
it.
Cheryl, we'll continue with you.
Yeah,
6%
perfect.
if it is growing every year, when will it get double?
12 years.
Thank you. 8% if it is growing every year, when will it get double?
9.
9. Now, Shell, you don't have to calculate further, because I know calculation is what people don't want to do it. Look at the table. There is a pattern over there, and you can just complete the table by looking at the pattern. Tell me what is the pattern, and just complete the table. Don't calculate.
That
You have to
looks
just
like
inverse.
Inverse.
Start the CAGR from 72. is
It was for
1.
Cheryl, but it's okay. So Cheryl, you got it. It's a inverse. So
Yeah.
I'll just have to write 8, 6, 4, 3, 2, 1. Guys, I manage $30 million. I have $1 million from this HNI people, like somebody's jockey's distributor, somebody's a big perfume distributor, and I do this only with them. I don't do any rocket science, alpha, beta, gamma. no structure notes, no option, nothing I do this exercise and today morning also I closed the deal with a person whose net worth is $10 million, and I just did this with him. So what I'm trying to say that this is a very simple rule of 72. Warren Buffett has talked about it, Peter Lynch has talked about it. Power of compounding is what very important. So there is a very good saying that between the investment return and the investment, the investor himself is the biggest problem. Because the moment stock goes up 20%, 30%, 50%, he cannot fathom it and he sell it. So I'm sure Nikhil can tell us better about it. And even it happens to all of us. So now can you answer, if my money, $1 million, has grown $2 million in 3 years, what should be my CAGR?
24.
Thank you. Please let Cheryl answer. Huh? Now I'm going to ask Cheryl more questions and Naveen also. So how I'm simplifying the whole investing. So you remember there is an aeroplane going through the air and it has 500 golden bricks. One brick is fallen. You know, the children ask this question. One brick is fallen out of the aeroplane. How many bricks are left? Cheryl.
I have no idea. I think this is a trick question, so I'm not going to answer. Okay.
Naveen, how many bricks are left in the aeroplane?
Okay. Bhuvan, tell me the question again. I'm gonna answer
Question
it.
is,
Yeah.
an aeroplane is flying with 500 golden bricks.
Yeah.
One brick is fallen out of aeroplane. How many bricks are left in aeroplane?
In the aeroplane. Well, obviously 499 because one has fallen out.
Thank you for thinking simple. Thanks.
Okay. Yeah.
Now the king of the jungle has the birthday party and everybody's celebrating. In the meantime, one old lady is crossing the river. The river is full of alligator. How will she cross it?
In many ways. She can make a boat, tie
Okay.
wood together and go on that.
Right? Good. No problem. You're at least thinking of a solution.
Yeah.
All the alligators have gone to the birthday party. Okay. Now tell me a very simple thing I'll tell you. How will you put an elephant into the fridge in 3 steps?
Well, first, kill the elephant, I guess. Then cut him up into small pieces and then take those small pieces and put it in the fridge. That's
No
3
problem.
steps.
So elephant is in fridge. In the simple word, open the fridge, keep the elephant, close the fridge.
Okay.
Now, how will you put a giraffe in the fridge?
Well, the same way. Take out the elephant first and then put him in the fridge.
So everything in life is a sequence. The idea is that when I'm asking you a second question of 24%, it was based on the first question. Now I'm going to ask you a third question, which is based on the second question. Now, before I go to this, let me finish the riddle. You know what? In the end, the old lady still dies. The old lady is crossing the river and the
Crossing the
alligator.
river, she dies, yeah.
Why?
I don't know, she tries to swim, she doesn't know how to swim.
Okay. What about that brick?
The brick hit her head.
Yes. So the idea is to make you laugh. The idea is to make you think simple. Thank you for laughing. So Naveen and Cheryl, $1 million growing at 24% year on year or CAGR will become how much in the 10th year? Don't use this formula. You don't have to use this. Only use the last question. That's your elephant and this is your giraffe.
Is it open to all?
So I will open it to all once they will not be able to answer. So Naveen and Cheryl and even Smith can answer. And if because they choose to be volunteer, we'll open it to everybody. Everybody will be allowed to participate. But Nikhil, if you'll answer, then it will be rigged. Let's be a very, very unbiased presentation. You anyway know it. You know that's how your money came to my management. So much time, guys. Is it that
10 years?
100 million? 100 million?
कौन बोल रहा है? I can see the other person.
Smith.
You are
Yeah.
saying,
Think
Smith,
it's
you're
Smith,
saying
yeah.
in $1 million growing to 20. हाँ कितना है Cheryl?
10 लगता है मुझे यार.
Thank you Cheryl. Cheryl कैसे किया जरा बताइए सबको. बहुत अच्छा आंसर, सही आंसर.
बस वही, if it's going to double in 3 years, because I just divided that 72 divided by 24, it takes 3 years for the money to double. तो 1 से 2 हो जाएगा, 2 से 4 हो जाएगा, 4 से 8 हो जाएगा, and then we don't have another third year, we have 2 years, so 10 हो गया. Is that right?
Thank you. So
Yeah.
basically Pranay also answered it 9 times. Amazing guys. And Cheryl, very good thinking. Now Cheryl, This was your previous help. This was then help for this question. Now forget about all that. Now remember only this. $1 million growing at 24% becomes 10 million in 10 years, or 9 million, Pranay, for that matter for you. We are absolutely okay with the approximation. Last question, and we go to the practical. A big a big high five for you, Cheryl, and for Pranay, for you, because of giving the right answer. $1 million growing at 24% again will become how much in the 20th year? Just use this equation. Don't use anything else.
Okay.
It is the simplest question among all the questions I've asked. I'll give a hint as well. So $1 million at 24% for 10 years is how much, Cheryl?
10 million. You're saying in 10 years. Yeah.
10 million is how many times of 1 million?
10 times.
If I would have invested 2 million instead of 10 million, sorry, 1 million, how much it would have become?
20 million.
Thank you. Now I gave you the hint. Now tell me the answer.
I think now it is 100 million, if I'm not wrong.
Thank you. I'm not in a physical web seminar, but thank you. The answer for $100 million. Would you like to explain to people how did you do it?
No, basically the same logic what you were applying in the example when you were explaining this. So we just multiply it by 10 times, because every year I'm getting the same returns, so it will be getting same times for the next 10 years.
Okay, Naveen and Cheryl, are you convinced, or should I explain?
Please explain.
Okay, very simple. So I put $1 million 10 years ago.
That the logic was right. Sorry to break.
Yeah, absolutely.
My logic right, or it was just
okay. See, the only thing is, इतने सारे वेबिनार और सेमिनार करके क्या समझाने का तरीका थोड़ा चेंज करना पड़ता है. So million has become 10 times in 10 years. Cheryl, if I would, or Naveen, if I would have put 10 million 10 years ago, it would have become how many times? How much?
100 million.
100. So 10 million, if I reinvested after 10 years for 10 years, it became 100 million. So basically 10 plus 10 years equal to 20 years. So what he said makes sense.
Yeah.
The right answer is 85 million and the right compounding is 25.89. But यार मुझे प्रोफेसर साइंटिस्ट नहीं बनना है, हमें कैसे बनाना, राइट? Now, मैं भी जॉब में था, so Cheryl knows me well. We both have been banker. She has also become financially independent. I think Cheryl, आप trading करते हो, am I right? Rule based trading आप अभी भी कर रहे हो, right?
Trading, हाँ, forex करती हूँ.
Yeah. So guys, if you love to learn about trading, I will love to do a session for Cheryl, and Cheryl can talk about her trading strategy. And she's moved from Dubai to Cheryl in Canada, right?
Yeah, Canada.
So now, thank you for giving the answer. Now everybody can participate. And I would request all of you to give me only one company, not 10 companies. And it's a layman investing, because I am at least a layman. I don't have any, I know I scored good in maths and everything, but Naveen is making more money than me in America. He's my classmate. So what I'm only promoting here is that you guys should sell your property and invest, because we will have a bright future to make money. Now, this can only happen when I will show you. It is such a simple exercise. So now I showed you theory. The mind is saying that Bhuvan, theory में सब अच्छा है, होता कहाँ है? Because we are so much, even we've been selling insurance product earlier. Cheryl knows about it. Now the insurance or ULIP, I think every Indian has 5-6 ULIP. Every Dubai people has 3-4 insurance policies. This is nothing to do with insurance. This is nothing to do with ULIP. This is a pure vanilla stock investing. Now the crux of the whole webinar is in front of you. I will be putting 3 conditions in front of you, and let me show you what this Excel sheet is. This Excel sheet is basically using the Google Finance function. I am finding a price of a particular share on a particular date, and for ease of convenience, I have taken 10 years from today's date to last 10 years. I'm gonna buy a company not more than 10% in my portfolio, or let's say that is my mandate to you. Because I'm a risk-averse investor, I cannot put everything in one company. The second thing is, I want to buy a company. I want to buy a company for me where you are the consumer. I don't really care whether you are buying some mass for me. Don't buy all that for me. Just buy a company if you are a consumer. Third, you are such a busy person, and for that I have to do a webinar on Sunday because weekdays are not possible. So you are not really keen on the financials. So please don't buy and sell for me. Just keep these companies remain invested. And after that, we'll do permutation combination as well. Now, each one of you can participate. Just give me one company which you're using. Obviously, it has to be listed. So it could be, let's say, one company from your favorite hotel brand, or you have a favorite car. You have a, let's say, a card which you use, you like the card benefit, or maybe it's a car garage, or it could be, for example, a restaurant. It could be your favorite drink. It could be your favorite shoe which you wear in the morning, or maybe you buy from a supermarket. So one company, we have so many people, or two companies you can give. I'll just take 10 companies here, and I'll show you, and we all see what is the end result. Please go ahead.
So this is, what are you going to do with this, Bhuvan? You're going to get the historical returns and show something?
Right.
So you want me to pick something which has good historical return or bad historical?
No. So I don't know. I have no idea. You are the fund manager. Now I know you will say that Bhuvan's history has been right or better. So what I'll do for you in the end, I can buy this company at the top of 2008 and then show you what happened. Or maybe I can take that company to 2020 March and show you what you made. So I don't know which company you will take, but obviously people will take bad companies also. So good, bad, I don't know. All I'm promoting is that if you like the product and services, companies are going to get benefited. And if they're benefited, this will be shown in their share price. But I don't know.
Your condition is you have to like the product. Only recommend the company you like the product, you use and you like the product.
Obviously.
Yeah, okay. So I would go with Macy's and Microsoft.
Okay, thank you. Okay, so I think my team is there helping me. Who's there?
Macy's is M, Microsoft.
Yeah, so my team is there, so helping. Go ahead. Cheryl, please go ahead. Amey, Amit, please participate, friends.
Yeah, Tesla.
No, sir.
I would say Tesla.
No. So Naveen will be very unhappy. Do you have Tesla with you in America?
Yeah, I have.
Oh, Naveen. So, sir, we would like to avoid Tesla because this will spoil the whole example. But let's just see the return. TSLA. Put it, Rohit. TSLA. Now, if you look at Tesla, it has given roughly 100 times of. Okay, it is giving. It's coming. This one. So Tesla has made my money from $100,000 to $15 million. Obviously, this kind of returns are possible, but this will make it look very exceptional, and people will not buy the whole theory. So thank you for giving Tesla. Can we take something else? Maybe your previous car?
Apple.
Yeah, Cheryl, go ahead.
I was going to say Amazon because I use Amazon a lot. You asked to choose a company I can use.
And please keep it simple, keep it sweet and simple. KISS theory, which we follow the old lady example. Who else is there? Manish, can you please take one company? Pranay, Soman, if you can participate. Vivek, Smith.
Nike. Take a financial stock.
Maybe can you type in on the chat? It will be easy for us.
Nike.
Is this only US or includes Canada as well, Bhuvan?
You might choose Canada, no problem. But the only problem is it's a dollar to dollar, right? So yeah. I think it will not be very high impact. But if you can give us the dollar listed company, that will be more advantages. But what you can do, Cheryl, we can share the sheet with you because we'll have a time issue, and you can do for the Canadian brand which you use.
Sure, absolutely, no problem.
So I think we have to chat some Vesco. Somebody said Vesco. What is Vesco? I don't know, guys. I think you guys are using Vesco. And Honda. Yes, Honda came. We have also got PNG. Pranay will not be able to take Asian Paints and Samsung because Samsung is not listed in the US. Amazing company. Asian Paint is in India. So we have to take all the Indian companies that matter. So please give us something else. Now everybody can actually participate because I think we still have 5 more companies to go.
So let's take Home Depot.
Home Depot. Yeah, go ahead. So Rohit, please take Home Depot. Your favorite drink, guys? What do you guys drink there? Or maybe
Walmart.
Walmart. Maybe a hotel brand. You go for a holiday, or maybe a car rent a car company. America mein to car rent a car, or maybe that
Hilton.
Hertz.
So I think we're just done. And Honda is HMT. So how do he get the code? I'll show you that also because whatever we share today with you, we are going to share with you so that you can do the permutation combination. You will only believe this once you will try this 5 or 6 times, and we want to do that. So HMC is the Honda's code. See, you can see HMC for New York. That's how we take the code. And now I think he has put HMT. It is HMC. So Hertz is there, and one more. I think there's one more company you have to give me.
Bank of America for me. The one.
BAC, I believe, right?
BSc.
Yeah. Hertz was not listed 10 years ago. Can we take anything else?
Etsy.
What?
Hertz, by the way,
Etsy. Etsy.
Hertz was bankrupt in between, so
Yeah.
so
So
you'll
we'll
get
do that. I got a point. So basically, you want to give me a bankrupt company? I'll take that. I'll take it. I understand, Naveen. So Naveen is a financial wizard. He's a CFA in Dubai, in the US, and he has an algorithm trading as well for his life. So I would like to. I'm very happy he's playing the devil's advocate, and he's a very, very good friend of mine. So let's say Naveen had taken gold instead of Hertz, which has not made me any money. Now,
Okay.
even after taking gold, losing money in Messi, losing money in Honda, and not making enough money in, let's say, Walmart and Procter and Gamble, and not including the dividends, you guys collectively compounded my hypothetical wealth in the last 10 years by roughly 5 times. Where markets are still down this year, in July or August, we're still down 12-13% this year. You can see this. Somebody has to be muted. So what I'm trying to say is that even after losing money in some companies, we could do a 15 to 16% compounding. Now further research has to be done that why Microsoft made me 25, Amazon made me 7, let's say 28, or Nike made me 17. The very simple math goes is, if company's profit grows X percentage over 10-year period, the price of the or net worth of the company grows in a similar fashion. Now let me tell you what companies you have not given me. You have not given me Dell. You have not given me Lenovo. You have not given me FedEx. You have not given me UPX. You have not given me Target. You have not given me Dollar Tree. You have not given me Skechers, Reebok, Adidas, McDonald's, KFC, Pizza Hut, Domino's, Dunkin' Donuts. The idea is Pepsi, Coca-Cola, and you guys are the biggest consumer in the world, by the way. So, and you have these brands at your home right away. Philip Morris for that matter as well, Nikhil. So what I'm trying to say, guys, and Starbucks for that matter. He's a Starbucks fan. So all I'm saying is, see, so he's taken Ralph Lauren, and Ralph Lauren I've lost money, but still I made 15.73% CAGR. So Naveen, I'll tell you one thing, and I totally understand, but this is what is happening. Now, my job, why do you need me, is first, I'll keep things simple. Second, I will remove Messi, I will remove Honda, I will remove Ralph Lauren. So with 50% of science being into the investing, I will be able to buy companies for us, which are great quality and great compounder. And since I'm a performance fee driven investment advisor, I have a significant skin in the game. Having said that, I have an option and a quant strategy as well, run by my partner Amrit Pal Singh. But even in that, I have seen that when the stock goes down, even the option writer has to, the life becomes very, very difficult. Yeah, there could be hedge funds, I will not deny. They might be the extraordinary people. But even D.E. Shaw, which has not taken money for the last 10 years, from I think 2013 they took the money, they charge 3% fixed, 30% performance fee. And their returns for the last roughly 17, 16 years is 11% odd. There is a fund, Ariel Fund. Ariel Fund is managing $20 billion, Cheryl, and they are only delivering 10% return. And so what I'm saying, the people I'm dealing with, they don't want 20%, they want 10% because they have huge money, they just want to preserve it. But people like you, me, we have to make this much money. And this is how simple it is. And we can do one more set. So Rohit, why don't you show them other sets? So we have a lot of other investors. In the morning, we met somebody. We did for him, it is 18.4%. This is the morning guy. We did this with a salesperson, sales manager, director of a company. It is 20.47%. Okay, and he has margin calls in the private bank right now. So he has got $2 million, which is basically in the private bank, and he's unhappy, and he would have done this. He had no idea. Now, there are many people we have met. Even I think Manish is also here. And this is a US person. He's right now in the call. He's my classmate from SP Jain. And he himself did this with me. And I have not influenced any stock, Pfizer, IBM, whatever he gives. And let me change these two companies to gold. So let me change to gold. Let me change, not IBM, sorry. Let me change Microsoft to gold as well. Now see, we bought 3 gold companies we lost money so many places. We still managed to get 11% CAGR plus dividend. So that is what it is. So first thing is what to buy. Second thing is how much to buy. And the third most important thing is up to what time to hold. And that's simple investing philosophy we are following. Now we are open to question. I think I've already taken 7 minutes more. Thanks a lot for participating.
Bhuvan, I have a question.
Yeah, please. Can I see you?
Uh,
Ameya, yeah, Ameya, hi.
Hi. Quick question. So I understand what you're trying to achieve here. My question to you is, before even advising a customer about any particular stock or group of stocks, what kind of risk profile you try and ascertain for a client? So there may be customers who are from different range, from a very conservative to an aggressive customer. Each individual cannot invest into stock, or each individual cannot invest only purely into stock, whether even if those stocks may be blue chips or dividend or growth stocks, whatever they are. For each client, and as you rightly said, many of the customers don't want to manage their own investments. Is it ideal to invest in stocks for such customers who are not even savvy about it, without knowing their risk profile?
So without knowing the risk, so first of all, let me give you an introduction as well. Ameya is my ex-colleague from RAC Bank. Now he is financial planner in TD America. And I'm very happy that
TD Canada,
and the markets are very well regulated. So Ameya, we are not the financial advisor. We are the fund manager. So people should consult their financial advisor before they invest with us. In whole presentation, there was not a single part where we are advising anybody to do anything. We are just showing what we feel is great and has worked. Now, let's say somebody cannot see a 30-40% downside. He's not ready to say that capital can theoretically become zero. Okay, theoretically it can become zero. And a person who is not having a 5-year horizon, we don't take their money.
I see that, but what about fixed income? We haven't discussed anything about fixed income in this entire
discussion. We don't do fixed income. So we decided, so we were doing everything earlier, Ameya. We, like in the RAC Bank, we were doing everything. I'm sure Cheryl has a portfolio which has everything. And private banking, we were doing everything. So fixed income is what client has to take that call with his advisor. We are not looking at fixed income, because if we will look at the fixed income, then we will lose the whole charm. So we have left everything out for other people to grab it. We are not keen in investing in fixed income. After seeing this for ourselves, after reading so many books, knowing Warren Buffett so well, reading these books, making money myself for clients and myself, we are not looking at fixed income. But it's a great place to make money. So one thing on the Ameya's line, you can make this kind of money in property. You can make this kind of money in fixed income also. You have to basically change the way of investing. So for example, if you would have bought property in 2 years ago, you would have made 60-70% return today. Are you selling? That's one question. Have you buy as an investor? That's the first question. If you have done that, you can also make money in property. So I'm promoting 15% return and just not the founder's portfolio. But that's what I do for a living. And if you want to go through me, that's what I'm going to do it. But you can similarly do the same thing in gold also. So my opinion that gold might go at a very good rally, and that rally will be a great opportunity for people to make money out of gold. but we will only invest in companies. So it could be a gold mining company, but we will not invest in commodity because we believe in power of management, power of people. Like Cheryl has become financially independent, Nikhil has done such a well thing for himself. I have become financially independent. So people's power, and we all have gone through our ups and downs. Do we agree, Cheryl and Nikhil? We've all gone through our ups and downs, and it is not that we will not get it again. But whenever we'll go down, like Ameya, yourself is a great example, coming all the way from Dubai and going to America. I just want to tell you, Ameya, one of our ex-colleague is a businessman in Plano, in Texas. So, so all of us have gone through bad and good phases. So please read about it. So let's say you think should talk about fixed income also. You are free to do it. I think I will not be doing fixed income anymore. Yes, you should have 8 months of money with you, liquid or in terms of property or credit card or salary. But I think if people want to multiply, so I have one question. I think one question to you here I want to ask you, and Cheryl to you also. Last question. So if you look at this sheet, I think what happened? Why are we losing this company? Rohit, why we don't have this last company? Any other question we have, guys?
Do you do shorts, Bhuvan, or only long equity portfolio?
Long, only kind of a hedge fund. Yeah, yet not we have launched a hedge fund, but only go long.
Long, okay.
Only go long. No short, no leverage, and very 10 to 20% of the portfolio is changed over a year, but no short.
Oh, no, okay. No leverage either, no?
No leverage. I have to learn from you, but I have actually left all the leverage thing. So what happened, Naveen, a lot of customers, like our friends, customers and all, they've all wiped out in last 2 years. And this year also people are 40-50% down because they leverage. But you're right, one should do leverage if you understand. I don't think so people are ready for it. Like Ameya said, people don't understand equity. Leverage with equity is a very high risk proposition, and only people who are expert, like Naveen is an expert, or maybe I think Cheryl does that, maybe probably. They are an expert who play with the rule-based thing, and they set on the system or they use algorithm. We don't use leverage.
Right.
So last question. Go ahead.
What do you have any risk management tool, Bhuvan? Do you use?
No.
No, you don't. Oh, so it's okay.
So we don't use any tool. We focus on the company because wealth is created in the company, transfer in the stock. So alpha, beta, as I told you, gamma, alpha, beta, all these statistics, we don't use it. And I'm soon going to change my business card for my research team also as a business analyst. We are interested in the entrepreneur, and we want to know in the next 10-20 years what kind of vision he has for the business and what can he create. So Excel is very limited. That's why in fact, first time after so long, I'm using my PPT for my product presentation. I only use this Excel sheet and that old lady example who dies after the biggest.
How much, Bhuvan, do you keep some kind of cash so that you can take advantage of like a market going down that point in time?
Very good question, Naveen. I want to show you something. So generally, we don't keep cash unless market is very, very buoyant. Market has gone very crazy level, and we might want to sell one or two companies to maintain cash. Now, since you have asked this question, it's a very good question, guys. You should hear this. So historically, gold has gone up when the stock market has crashed. Naveen, do you agree on that?
Yeah, means that correlation sometimes break, but yeah, in general, yes.
One time it is broken, but apart from that, it is always stand very tall. So from the data-driven point of view, we are very bullish right now. And I can show you from the history of last how many rate hikes have happened. The stock market, where specifically the quality companies have gone up, and there is a reason behind it. So we are very bullish. So we are fully invested. There could be in future a time where we can have 10, 15, 20% cash waiting for to be deployed for a great company. Now I want to show you all this company called Aura Minerals. Now this is very few companies in the mining sector which are driven like a growth company. Now it's a growth company, and if you look at the company, if you would have bought 10% in this company in the portfolio at, let's say, $2, we are not smart to buy, let's say, lower price, let's say $2, $3. This company actually eventually went to $30. Let's say I sold at $20 or $23, or let's say even lesser. And at the same time, gold went up by 40%. So what we do, Naveen, the hedging part, we buy 10 to 15% to gold mining company. And our philosophy is head, I make a lot of money, tail, I make decent money. So we have tweaked the Warren Buffett quote with that one, the rule number 1, don't lose money. Rule number 2, don't forget the first rule. So what we were, since we are small, and Warren Buffett said this, if I would have had $1 million to manage, I don't promise you, I swear of my mother, I would have killed the Dow Jones index, and I would have delivered 50% return. In the investing business, D. Shaw doesn't take more money. Jim Simons, if you guys know, you know Jim Simons, guys? I'm sure Naveen knows. Renaissance. Jim Simons is the person who charged for 5% fixed fee, 40% profit sharing. He has delivered 44% return throughout the last 25, 30 years. He's a scientist. He doesn't take money. And the reason why he doesn't take money and he returns the profit to you is basically they have find statistical anomaly in the market. They are all these scientist people, and they find that they can't deploy more capital. Right? So let's say Aura Minerals total market cap is $500 million. And tomorrow if I'm managing, let's say $10 billion, then I can't buy Aura Minerals. So strategic advantage belongs to people who are smaller. In the equity business, you need to be smaller. So coming to the point that this company become roughly 6-7 times, even if I sell it at 4 times, Naveen, in this kind, and I believe that this time gold will go up again, and that's the risk I take in terms of the investing we all take. So if it becomes 4 times, and we just bought more of this company at $7 or $6 because management themselves bought. So one very good indication, even if you manage your own portfolio, Cheryl and Naveen, when the management buys, get in, because management generally, by large, not all the management, they as an insider know the value of their company. So this company we have now bought at EBITDA, EV by EBITDA of 2.5, and if the market has to end euphoric in the next 1.5 year or 2 years, then eventually this gold will pop up. And if the gold will pop up, the correlation of the gold mining companies are roughly between 2:1 to 3:1. Means if gold goes up by 100%, the gold mining company goes up 300, 400, 500%, depending on the kind of size you have taken. So if we make 30-40% here, Naveen, we are done from one company for the whole year. And just to give you my thesis on this, we actually made 8 times in one company between 2020 and 21. And the philosophy was very simple. Peter Lynch said in his book, if you buy a company at P2, P3, the chances of going wrong is very, very remote. Then we further study the company, we meet the management, and the freight went to roof. We bought this company at roughly $12 here. And this company, I was very fortunate to sell at 102. And then it went to 107 and came back. Company is still good. But since the freights have come down, I wish I would have bought this company at $3 and I would have sold at roughly what, 95, it would have been 30 or 25 bagger. But you know, it all looks very rosy, not easy. But even this kind of investing we have done in the past, and that's basically cigar butt investing, you may say, or you may say that buying a commodity play. But right now we are not doing this. But in times to come.
Bhuvan, sorry to interrupt. Why did you sell this then? What was the thesis of not holding it more?
Very good. So this is a commodity company. It's a shipping freight company. And if freights are coming down, then they will not be able to charge the higher premium, and markets are forward looking. So what happened, Naveen, is that the new ships were not built from the COVID period to 2021-22, and the significant delivery was coming in 2023. So today they still command a good price, but the future contract will be coming at a lower price. And company is a value buy, not a growth company. So we sold it. We knew it that we're going to sold it. So not only this, we also sold an oil mining company from Oklahoma, which is called Continental Resources. The idea in a commodity company, you have to always sell. I'll show you. So cyclical companies, Naveen, you have to always sell. So right. Just to tell you why Apple, Google, I will not sell, example, or you should not sell, because today Cheryl cannot buy an Apple iPhone 6 or an iPod. So every branded company, they dice their own product every 4 years. So it's basically the moment everybody sells the same feature, Apple changes the strategy, Samsung changes the strategy. So any commodity play you have to sell to make money. So you have to understand the cycle. Howard Marks said, 95% things in this world works in a cycle. Now real estate is going to go down. There's a very beautiful company, a home builder company. I forgot the name, MI or something. Wait a minute. Let me show you that name, home builder. Give me 1 second. I want to show this company, that amazing company in terms of cash flow. Give me 1 minute. In the meantime, you can ask any question, guys, if you have. Naveen, I answer your
Hi,
question?
Bhuvan.
Yeah.
Yeah, all good. All good. Thanks, Bhuvan.
Yeah, please go ahead.
Bhuvan, this is Smith here.
Yeah.
So just wanted to check. So whether do you invest in only the US markets or as well as in the Indian
No.
market or any other markets?
No. So we have 3 companies in Canada today. We have 2 companies in China, and we have remaining companies in the US. We are not market specific. We are company specific.
Okay.
Yeah, but obviously will not go to Russia. And our learning from China is we'll only go to China when China is available at throwaway price.
Okay.
Yeah.
Okay.
So, Bhuvan, your portfolio is like fully managed, or there's some discretion from investor side as well? How is
So,
it?
so Naveen, we had all that in our earlier journey where we used to ask the client. I had a very touching slide which I have shared in my annual meeting last year. It is on the YouTube. So I used to ask people earlier, and I went to Tesla showroom. I'm telling you the live example, Naveen, and I drove Tesla, and I fell for the company and fell for the product. I said, what a product he has made. And then I went to the pitch book, and I saw the investor, like Saudi funds have invested big time, and the company has a conditional warrant for the CEO. And I proposed to my investor to buy Tesla. And my philosophy was that I buy for him and I buy for myself. And he said that no, they have debt, let's not buy it. And today we would have made 25, 26 times. So it's pure discretionary, but you are somebody different who might have a different thought process. But Naveen, very simple, if you have to uh, tell me what to buy, then maybe why are you paying performance fee to me? My job is to take a headache away from you. But maybe you can tell me you're an auditor, so I should not buy these kind of companies because they are audited by your company. So then one agreed. Maybe you are somebody who is not interested in financials. So 1 or 2 company here and there is fine. But majority of my whole portfolio is totally discretionary, mandate, and that's how we operate. So we have done that in the past. And वो एक आपने सुना है, there is a movie called Made in China. Customer को क्या पता है? I think you know it. So that's what is happening here, Naveen. People are buying anything, hazard. One of my clients have been bought $5 million in a capital guarantee investment with Julius Baer. 1 million belongs to client, 4 million belongs to Julius Baer. That the return was 3.5 or 4%, and plus the leverage cost. Today the leverage cost is 3%. It was sold 2 years or 1.5 years ago. Does it make sense? It doesn't make sense to me. So the client, and you know, I have told him that we have lost money in structure note, we should never do that. He's still doing it. So problem with customers is they buy only because you follow up, right? Cheryl, you in the banking, follow up. My investors give me money. After a point they get tired because they neither have time to read the agreement, they don't have time to see the whole thing. And again, after 6 months, I ask them, okay, so sir, $1 million has become double in 3 years. What is the CAGR? Arey yaar, nahi pata. Don't take the maths test. That is what is happening, Naveen. That is what is happening.
Right. And
So
is there any insurance on the principal or?
No. So insurance is from the interactive broker. So if interactive broker collapses, then up to $250,000 cash and up to $250,000 the stock investment is secured by SIPC. You know that better than me.
Right. Okay. And from
Bhuvan, I have
your
some
side,
questions in chat.
your
Sorry,
your
please go ahead.
Go
and
ahead.
Bhuvan, your company is audited by
Yes.
someone. You have like.
Yeah. So our company is audited. We are a financially regulated company. You will find in the FSC Mauritius, you can search Client First Capital. You'll find our license over there. We have the trustees, and our audit is going on right now. So everything of ours is audited and AML compliance. So right now the FSC itself is doing the money laundering audit. So everything is audited.
Bhuvan,
And
do
what's
I
the
have time
minimum
for another question?
minimum investment, Bhuvan?
Minimum investment is $250,000.
Okay.
And it can go up depending on, it is not necessary that we should invest minimum. I always ask people that ask me how much you want to make in the next 5 years. So minimum is 250K. There is a reason for it because in DIFC there are $1 million is minimum, right, Cheryl? $2-3 million is minimum. So 250 is the sweet spot for people to start. Let's say they don't have 250. Since we have this urge in us to create HNI, you can invest that over a period of time.
Can I ask you something?
Yes.
So what I understand is you are not selling individual stocks to clients.
No.
You are not allowing clients to select stocks, so there's no discretion. So are you selling your proposition as a mutual fund?
Okay, good question. So RIA, Ame?
No.
Registered Investment Advisor in the US, the concept
Okay.
called I'm an RIA. So I'm one step away to launch a fund, and I will launch fund only for the ease of the operation and create more value in the eye of an investing company when I'm investing as a fund. That is the only technical requirement left, so that we can buy properly a share. We have to now basically sometimes we have go ahead.
So you are investing on behalf of customers. So let's say you open an account for them. You're buying stocks in their accounts.
Absolutely, it's a PMS
as a discretionary manager.
Yes,
So your powers are managed. So client doesn't have the access to the investments or the choice of funds or the choice of stocks in their portfolio. You manage it on their behalf. Is that right?
So you're talking to a fund manager?
No, I'm asking you.
Yeah. So you're talking
what
about
is your role?
Fund manager.
But you're saying you are not a registered fund yet.
So I don't have to have fund, no? In a PMS, you don't have to have a fund. You get a power of attorney from the client. So the America is very advanced place, and our custody is in America.
Yeah. So essentially, you are managing the portfolio on client's behalf, right? Okay. And what is your fee structure?
So my fee structure is the by and large, mota I'll tell you. Basically, whatever you make, 20% is what we make. So for the US investor, there is no brokerage we charge. We're not allowed to. And so brokerage is there from the interactive broker, which is very less. So let's say
you're charging a management fee of 20% over the portfoldio value.
So we're charging you 1% fixed fee. And let's say you gave us $100,000 example, and you made $10,000. Now $10,000, 20% is $2,000, which is to be paid to us on 31st December value, which will be paid to us on 9th of January or 10th of January. Now, since we charged you 1,000 already, we will be only getting 1,000 more. So 100,000 plus $8,000 net will be in your account for the next year.
But you said 1%, right? Initially.
So 1% is this okay. So I'm telling you 1% is a fixed fee, which will be adjusted in the profit. So mota what we are 20% working partner of yours. So let's say whatever you make, 20% goes to us. But let's say a particular year goes bad. We have to still meet the company. We still have to pay the regulatory costs. We still have to service you, do our writing and everything. Salaries have to be paid. So what do we do is we charge you 1% throughout the period of 1 year. So now $100,000, we have charged you $1,000. Now let's say you end up the year with $5,000 profit. We will not be charging you anything else. Anything above $5,000 will charge you 20% as a performance fee. So if you
have Bhuvan, you have high water mark there?
Yes. So high water mark is 5%, no? Because we charge you 1%.
No, but high water mark on any losses of previous years.
Yes, okay. So look back is there. Yes, high water mark is there. So basically 5-year look back is there.
Okay.
And in the negative year, what do you do?
Yeah. So what Naveen has asked and what Ame is asking. So $100,000 is, let's say, become 80. We charge you 1%, right? But you're locked at 100 because your capital was 100. Now next year 80 has to go 100. 100 has to become 105. 105 has to become 110. Then only we'll be eligible for performance fee. So, and then let's say it is 120. It is locked at 120. And then we are managing 120, and that's high water mark. So we have high water mark. So coming to Naveen's question, Naveen, I think I answered this question. So Naveen has talked about the buying and selling. So Naveen, if you look at this company, a home builder, it's a 12th largest company in America. Just going through it, I'm not saying I've done a decent research. A very good, decent earning growth. But if you look at the stock works in cycle, can you guys read the cycle? Why the stock is going down and then going up again? Nikhil, you are a homeowner. Cheryl, you also bought a house. Naveen, I think you bought a house. So is this a home builder company?
Right. Yeah, so I see, obviously, it's you see recession wherever 2008 period, wherever, so it's going down based on the business.
Naveen is absolutely on bang on things. So if I know this company is an amazing company, but I know people will not be buying houses when the interest rates are high. And that's why the stock has gone down and might go further down the next 2-3 years. But amazing time to buy when the stock is at the lowest multiples in terms of the cash flow discounting. And one can make 10 times in 5 years. So if you understand cycles where the company's earning is very consistently growing, but since home is not a mode business, because people are deferring their purchases now. Am I correct, guys? You are in America. People are deferring their purchases. Now they're going on rent because property prices are high, or because, the mortgage price is high, or they're looking upward. The home sale is down in the US. So once the home sale is absolutely down and it crash in the next 1.5 years, could be a great company to buy. So this kind of company also we buy, Naveen. And we also buy company like Copart and Constellation, जहाँ ये होता ही नहीं है. I'll show you Constellation. It's a company by Mark Leonard. He doesn't do any quarterly meeting. You have to ask him question only by posting on the website. Now this kind of company, I don't have to really sell. I have to sit, relax, read their quarterly report, and see if things are good and what he's doing and how. So this is a company which has made roughly 115 times of return in the last whatever years it is listed. Last 5 years, the company has made 2 times. Last 10 years probably would have been made 10 or 15 times. There are few great companies like Constellation. This is not the presentation about going deeper in the company, which I can go with one-to-one for the investors who would like to invest. I think we have some question in the chat. Any further questions, Cheryl?
Oh yeah, I had some questions in the chat when my Zoom wasn't working. I couldn't unmute myself. Anyways, now it works. And I think somebody asked a question already. What's the minimum amount? How do you get paid? Which financial institution? You said IB. And that question wasn't answered. I guess the investor has full access to their account, right? So you're just a power of attorney. The account's held in the investor's name and you trade on their behalf, right?
So Cheryl, forcefully, no one should do business today. So we tell the client on the day one that the day you don't like us, call Interactive Broker and tell them to dissociate the account. Or you tell us, we will dissociate you. It's a very simple exercise. We give you 24/7 access. People who see their portfolio often, we tell them don't look at it. People who don't look at the portfolio, we tell them please look at it. And we continue to write. So a 6-month letter is already out. It's a 22-page letter. I'm in a market. I don't know. Let me ask Nikhil. Nikhil, have you read my letter?
No.
Okay, thank you. So the investors don't read the letter. That is the irony, and that's okay. So we are open out there because we want more money from you. We want more clients from you. And when people are investing in a 5 or 4% kind of product, when they're investing in so much in the property, we are trying our best to be very open to the investors. We are available whenever people need it. And I have multi-millionaire clients, to be very frank with you. But the kind of money they have given me, $1 million, $500,000 like that. And they are the people who can give me more money. So I don't want to take anybody's name here, but what I'm saying is that it's a very open relationship where I am only eligible to charge you because you are busy somewhere else, which Nikhil realizes on his own. By the way, I don't manage friends' money. I have a clear-cut rule: friend, neighbor, relative, I don't manage the money. So some people told me, no, we are not interested in all. The idea was to share the education through you guys. Maybe I'll get some client, etc. And Nikhil came to me and saying that, no, you need to manage. I said, मैं free में help कर देता हूँ ना, portfolio copy कर लो. He said, नहीं यार फिर होगा नहीं. And then he understood that no, this service has to be paid. For example, if you have a doctor friend, कब तक फ्री में उससे एडवाइस लोगे? एक दिन तो फिर वो बंद कर देते हैं ना. बट फिर भी नो प्रॉब्लम, यदि आपको फ्री में वो चाहिए तो आप तो दोस्त पहले हो शरीर. तो ये मिस्टेक से हम लोग पहले करते थे ना. तो now strictly फ्लोर पे, नेबर पे, बिल्डिंग में, no business unless they recognize that there is a value in it. I am okay to pay to my friend if he is delivering value, but I would love to tell him, boss, ये ज्ञान ले लो आप, खुद करो, कोई दिक्कत नहीं. So I think we have taken more time, guys. Last question, if anybody has, I think people are left or not. So we're only think 6-7 people left. So see, 170 people we have approached. We wanted to share this knowledge. I hope the knowledge helps. We're promoting reading, Cheryl. People should read. There are some books lying behind Nikhil as well. So he's also reading nowadays, I hope. So I promote reading. I give a lot of books out. It's struggle. It's not easy to read. I'm sure you agree. You have been reading a lot of financial, by the way. And then you know what happened. You see only the bad thing as a corporate banker. Same goes to a lawyer. But there are very few companies, good companies out there like Viva Systems, like Copart. I just named also. Thank you. So Gautam is the author of this book, and I think Nikhil, you got it on your own, right?
Yeah.
Yeah. So this is a very nice book. One should read Joys of Compounding. I highly recommend it in my annual letter, as a 6-month letter. And soon I will interview Gautam. There's also a very good book called Richer, Happier and Wiser by Mr. Alan Spam. And this guy also will be available for an interview by December. So Vijay Kedia, I showed you. You saw the song. Were you there that time? No. I think you missed it, Cheryl. So there's a guy called, there's an ace investor called Vijay Kedia who doesn't manage anybody's money. He's 1,500 crore roughly worth. And he writes song on the stock market. He doesn't manage anybody's money. I've interviewed him also. His songs are a very good lesson for all of us to listen in our car. And those filmy Bollywood songs he has converted into this thing. And amazing guy. And I asked him, sir, which book have you read and which book you recommend? He says Bhagavad Gita. So Bible, Bhagavad Gita, Quran, if we read properly, because people say property is physical, I can see it. Sir, sorry, nothing is physical. You yourself is going to be perishable. So we all are custodian to the wealth. Money doesn't belong to us. Now, if money doesn't belong to us and our school system has not taught us how to make money, let's now learn how to make money. So when I was in America this time, I tried my level best. We had roughly 17 passes, right, Nikhil? 16 passes. And, 4 musketeers landed in America in Berkshire Hathaway's conference. Lot to take away from there. So next year I would love to see you there. I'll guide you and help you how you can have a passes for yourself. It's on the 7th or 8th May. So there was something called salt revolution. There was something called green revolution and milk revolution. I am on a path of money revolution. I'm not alone. There are a lot of other people also doing it. So the idea is that people should make 15% peacefully. Money is in front of them, but don't sell. Just because you have made money, don't sell. And take a help of somebody who's incentivized for that. Now, Cheryl, you are somebody who's great in terms of maybe, you're taking care of your health. But tell me why film stars have a great shape and their body. What is the reason?
Because they work out.
Why do they work out?
They have a fitness trainer who makes them
Why do
work
they have
out.
fitness trainers?
Because their wealth is linked to their appearance.
Thank you. So they are incentivized. That is why there's a performance fee. And that's what Warren Buffett said in 1957. He was charging 25% on this thing. By the way, Charlie Munger also had a similar partnership. And he also used to charge this kind of 25%. 6% was the hurdle. So I have a hurdle of 5%, but I charge 1%, but I reduce the performance fee. So in a way, it is a similar thing. And my fixed fees is adjusted in the performance fee. So it is the incentive. Today, if somebody will pay $1,000 to Nikhil, I'm sure Nikhil will start working out from tomorrow. So all I'm saying is we should all incentivize ourselves, and the power of incentive is huge. So there's a company I will just want to share before we move. The company's management is paid on the basis of the return on equity they generate. If they generate X ROE, they are paid this much. If they generate ROE of 20%, they are. So management should be incentivized, and that you can read if you will read the financials. So you will figure out that management is incentivized if they make money for the shareholders. That kind of company one can find when he will sit down in a room cut from the masses and just start reading, he'll find that these companies are there, and he has to just sit down, buy this company for himself and other people, and resist the urge to sell. So one of my company, which I think Naveen and I discussed, is up 77% in the last 1.5 months. This company, I am not gonna sell unless it's a Texas-based company, by the way. It's a San Antonio-based company, and it's a very simple business it is into, but it's a skilled labor business. This company has already become 500 times, and it is yet at $1.5 billion. Now, what is the company's important thing? The CEO maxed out his credit card 3 years, 4 years ago when company was in debt. Knew that the company will pay him off, and today this company is growing at 40 to 50% profitability. It is growing. We strongly feel if the company continues with this great runway, it could be our first 100 bagger. So before I die, I want to have 100 bagger, because that will path the way. So I'm saying this is a very good way. And I think I wanted to ask a question, but I think we have run a lot of time. People who are interested, please talk to us one-to-one. We have nothing to hide, and we have significant skin in the game. Cheryl, I hope you like the presentation. So we'll touch base. I think Shabba Khair and good morning and good afternoon to all of you in the PT and I think ET time zone, right? Yeah. See you next year, America.